Ladies and gentlemen, welcome to a new episode of the Fintech Hunting podcast. We have an amazing and incredible guest for you today. He has appeared numerous times on the show. One of the most listened to episodes. People take notes, they go back, they replay it. He always provides great insights. He's a technology expert. He's probably one of the best networkers I know in the mortgage industry. We sit on multiple boards together. But more importantly than anything, he's just a great person, and I can call him a friend. Please help me welcome Eric Kujula, Director of Product Marketing of ICE Mortgage Technology.
Thanks, Michael. I appreciate it. I really got to learn to set the bar lower with everybody.
Well, all of those things that I stated are definitely true, and we're so pleased that you could join us on this episode, so thank you.
No, we're very excited to be here. Very excited to be here. It's always fun to catch up and talk to you, Michael. It's awesome.
So last time we were talking AI, we were still in the middle of the pandemic. There's still a pandemic going on, but things have kind of opened up. What are some of the tech trends you're seeing? What are some of the challenges the lenders are dealing with right now as we've shifted to purchase? There's less capacity, or there's less volume, more capacity. Give me some updates on what you're seeing.
Yeah, for sure. Well, I mean, obviously, the transition to a purchase market is inevitable, right? I think it happens, as we all know, mortgages go in cycles and things like that. So we've definitely seen that trend towards that purchase market. But still, the lenders that we talk to are still hyper-focused on improving capacity, all right? And I don't mean just like being able to take stuff on, but also to handle some of these downturns as well going into the future. So the big focus is around kind of capacity, requests on how people are doing that in the marketplace. And we've had a couple of guest speakers and some stuff on some of the podcasts that we've done at ICE. But the big one is obviously clearly, and this is no surprise because every industry has kind of done it, right? But is embracing technology to help them improve their overall capacity, right? So right now they make these big hiring swings, right? We've been through it. Hire a ton,
Yep.
Get rid of a ton, hire a ton, get rid of a ton. Probably the wrong way to describe it, but that's kind of what happens.
Well, no, and your former CEO used to always call it as, in the mortgage industry, we throw human spackle at things.
That's right. Yeah, that's exactly right. And they're trying to find ways to make those cycles, shorter and more palatable. And really, one of the main ways to do it, which is of no surprise, is through kind of automation tools, which is why we've talked about AI and RPA type technologies in the past. And that trend, I think, is still going to grow. If anything came out of COVID, it was a catalyst for several things, fortunately and or unfortunately, depending on how you look at it. But it's definitely projected people to put some gas on that fire and really make some investment around kind of automation across the boards, right?
Right.
Yeah.
Well, and as we talk, COVID, I never minimized it. There was a lot of pain and suffering for people. So for those people that have had a lot of the struggles, I don't want to ever minimize that. But as we talk tech in the mortgage industry, there is a lot of good things that came out of this pandemic.
Mm-hmm. For sure.
People were forced to learn how to work remotely. People were forced to do all kinds of different valuation models and say, if appraiser can't go in the home, or if the borrower's not going to let them in the home, how do we value this property? Mm-hmm. There's much more e-closings. And then, like you said, AI and RPA, what I think people realized that in 2020, what did they do? They did the same thing they've always done in the mortgage industry. They just threw bodies at it. Underwriters getting signed on for an extra $50,000 signing bonus and making huge six-figure salaries and everything like that. And then the industry, reality wakes up in 2021 and says, we don't have as much volume. Volumes are going to be down. No matter what estimate you look at, they're going to be down 20 to 30% from where they were last year.
Yep. Yeah, for sure.
And so as lenders, and I love how you talked about capacity, because I think a lot of people just think capacity, we can handle more loans. How can we handle more loans more profitably?
Yeah.
More efficiently? How do we improve the borrower experience? How do we, if we do those things right through technology, then I don't have to hire and fire 100 people in 2 months and then let people go in 6 months. I can actually do it with the same amount of staff and handle a lot more volume. Mm-hmm. It's much more profitable.
That's right. To me, predictability and profitability tend to go together. They're not necessarily like solely tied to each other, but if you can make a more predictable business model, right, and a more predictable forecast into what you need into the future, regardless of kind of how the mortgage the market swings either way, you can definitely become more profitable that way because you're kind of ahead of the game, right? And getting to that data to make those decisions is obviously key. So,
absolutely, and I think the key with that, that predictability is really understanding what are your steps. I always call it the manufacturing of a loan. People always, they come to me and they want to talk about growth and how do I grow and what's the coolest lead gen tactics and everything. And I'm like, well, if I just dropped another 50, another 100, another 500, another 1,000 loans on your lap, what would it do? And invariably they all say it would blow up.
Mm-hmm. Yeah.
And I'm like, that's because you don't know how to manufacture a loan effectively, efficiently. So, you talked AI, RPA. What are some of the other steps lenders are actually doing, like in the mortgage process, in that manufacturing of the loan? What are some of the areas that they're really trying to attack with technology?
Yeah, I think that, clearly, I'll call it kind of the three spectrums, right? And you've kind of touched on them already, right? One is, how do we improve that borrower experience, and how can I have my borrowers be, I don't want to say self-engaged, where they're kind of, or self-service is probably a better way to describe it, but not necessarily losing that particular relationship, right? So by improving the capacity, that allows your team members to be more relationship driven, right? But that also requires you to do some investment internally on that kind of customer and borrower kind of. And I'm actually going to broaden it, Michael. So bear with me for a second. I'm going to sidetrack a little bit here, but I know we always focus on kind of like that borrower engagement, but this is true for a retail customer, a wholesale customer working with their brokers, and a correspondent lender working with their lenders selling them loans, right? So they're all looking at it, obviously with different avenues, right? But they're all looking at to find better ways to make those relationships and improve that capacity so that their team members can go out and forge those relationships. Because, as the market shifts, right, competition becomes tighter, volumes become more, you have to kind of chase for it and that type of thing. So that's clearly one area, right? And they're looking at portals and experiences and text messaging and different marketing campaigns, using marketing automation tools and things like that to help kind of hone in those particular experiences. The second area, right? It's like, okay, now that we've got those loans, right? We were successful. We've got loans coming in, right? How do we then kind of manufacture them? To your point, right? And the hyper focus there is really kind of on, in a retail and wholesale lender, kind of that underwriting process, and kind of like the areas in and around it, not specifically around underwriting, but even just pre-underwriting, junior underwriters, that type of stuff into the closing and post-closing arena, which ultimately impact the capacity within underwriting. So they're looking at automation tools, selfishly like in Command-Analyzer and that type of stuff that we've rolled out over the years, but even other ones. There's been new entrants to the marketplace, which has been fun to watch. And that really then helps drive the capacity, which then frees up the team, which then does the relationship side and the other side of it. And then you get into the last part of it, which is around e-closing. How long have you and I, well, everybody for that matter, forget you and I mean, it's like we've been talking about this. I was on a project at Flagstar back in 2002 to try and drive e-closing.
The joke I always say is you could grab some of the articles from 10, 15 years ago that talked about an e-mortgage and substitute the word digital. Mm-hmm. It'd be the same damn article today.
That's right. It's the same thing. So, but again, COVID was a catalyst for that, right? There's a need for it now, so there's a lot of emphasis and investment going on in the e-closing world. So I know that everyone's like, oh, you just talk about the entire process. Yeah, but you kind of have to, right? You can't just put areas of focus in one spot or another. You kind of have to look at your process holistically and find out where those bottlenecks are. And sometimes there are things that you didn't even know were bottlenecks before. It's always the fun things for me when we're talking to customers is finding those problems they didn't even know they had.
Well, and part of that, too, is if you don't have a way to track it, if you don't have visibility, if you don't understand your process really methodically, it's really hard to find those friction points.
Mm-hmm. Mm-hmm. Yeah, because sometimes people it's just everyday business for them. They're like, oh, I do this. This is normal business. I don't know another way, so ergo, there's no problem. That's where you want to put focus on. It's like if you're used to it, and you've kind of accepted this is the way it goes, that's probably an area of focus for you.
Well, and a lot of times the automation can be some of the easy, redundant manual tasks. Mm-hmm. I think where people get themselves into trouble as it relates to automation is they're trying to automate one of the most challenging parts, let's say in loan manufacturing, reviewing loan scenarios with a client. Mm-hmm. It takes a human person. You're probably not going to automate that whole damn thing. So why tackle that, and why not just tackle the hey, I can populate the borrower's information from my CRM into my point of sale and into my LOS.
Yeah, that's right.
Save 2 minutes, whatever alone.
Yeah.
That's where I see.
No, it adds up for sure. I mean, it's you look at the portfolio within your organization, right? And people are like, oh, well, the cookie cutter deals are easy to do, so it doesn't take us long. And I'm like, but they're the majority of your deals. It's like
why go to the difficult one? Why go to the exception to the rule and try to figure that out?
That's right. It's like focus. What's the majority, right? Like typically those cookie cutter deals, for the most part. I mean, I know lenders vary based on they deal with self-employed versus jumbo and that type of thing. But for the most part, a lender's portfolio is typically those kind of cookie cutter. For the most part, I'm probably going to get blasted for saying this, but cookie cutter deals, which makes up 50, 60, 70% of your volume, right? Let's focus on that and automate that piece.
Right, because look at the lift you could get from that percent. Mm-hmm. The other thing you talked about, and I think it's so critical because so many people get lost as we start talking technology and automation and AI and RPA and all of the shiny tools and objects out there. At the end of the day, it's to give people more time to build and foster more deep and genuine relationships.
That's right. Yeah. This is not a threat to someone's job. This is an opportunity for you to take more care in dealing with the people that you got. And that's both internally and externally. Right?
Exactly. Yeah. And I love how you talked across the whole spectrum, right? Mm-hmm. It's not just for retail or it's not just for the consumer, but whether it's wholesale, whether it's correspondent, whether you're working with your brokers, anytime you can enhance communication, have greater transparency, things are going to run more smoothly.
Yep. And when that happens, there's more liquidity in the market. When there's more liquidity, there's more investment. When there's more investment, there's growth. Like these things are like complementary. People are like, well, what area should we focus on? I'm like, all of it. Don't try and boil the ocean. Don't try and boil the ocean, but look at the segments. You've basically got three manufacturing segments, right? Just figure out.
Exactly. Eric, I love it. Great insights there. Let's talk about, so things are now more bands are starting to lift, depending on what day of the week and what news cycle and everything like that. But as live conferences start coming back and we start transitioning to live, give me some of your views on that. I mean, should we be going back live? Should some of them still remain digital? Are people just going to do what they did before? What are the lessons we could have learned from COVID to have a better and more impactful experience?
Yeah, it's interesting. It's been a very, probably a little bit unqualified to talk about it, but I'm going to talk about it anyway. But it's interesting. Well, let me kind of backtrack a little bit. Number one, yes, I think it's time that we go out and start rekindling some of these live events under caution, right? Watch what's going on, make adjustments as needed and things like that. But I think it's the world's ready to kind of re-engage with life again, right? For the most part, right? And to each their own. However, that's not going to be everybody. Right, so I think we're even talking about it with Experience 2022 next year for ICE's stuff. Is how do we make kind of this hybrid kind of approach where we have some live engagement in Vegas next year, but then also how do we incorporate a potential virtual segment to it as well? It's actually interesting. I'm going to change the topic just slightly if that's okay. But what virtual experience did for us last year was allowed our overseas team to watch it live and really get immersed into it, whereas historically they would not have been able to see those types of events. So there was an actual internal, I'm sure somebody thought of it, but I didn't see it until we started talking about this kind of unexpected positive trend internally because they got to see the output of their work being displayed on a virtual stage. So there was a huge amount of impact just making that connection to our overseas folks through that kind of experiencing. So we're trying to find ways to incorporate that, not only just to help our customers that want to do that, right, and our partners that want to do that, but there's internal teammates that found a ton of value in just seeing their hard work being put on display. So it was an interesting look.
Well, and I think you make an excellent point, and I really hope that's what people do from a hybrid perspective. You talk to some people and they're like, I just can't wait to get back out there, and their whole strategy, whether it's marketing, whether it's business development, is I'm just going to go to the show and show up again. Wasted opportunity. What do we learn from being digital? How do we build relationships digitally? How do we lean in and leverage LinkedIn and some of the other tools? And I have found for the couple of live ones that I've gone to, those relationships that I built and fostered through LinkedIn made the live experience much more impactful and much more meaningful. And I could text someone, I could send them a quick DM through social and say, hey, we're all meeting up here after. And instantly you had 5, 10, 15 people that wanted to meet up. Mm-hmm. So I'm a big proponent of if we're going to go live, and it was great seeing people, don't get me wrong, but I hope we don't just go back to, hey, now salespeople got to travel 30, 40 weeks out of the year because we're now back to traveling. Mm-hmm. Mm-hmm. If you can sell virtually and you don't need to be on the road 40 weeks, maybe you only need to be on 10 weeks, mm-hmm. you can close more business, you can be more profitable than all of the expenses. It's
That's
less
right.
draining on the individual. So I'm a big, let's find a hybrid. I hope some conferences don't ever come back live, to be brutally honest. And some of those people, I won't name any, and they're probably not happy I'm saying that, but I think some conferences lend themselves to being virtual, and it's very effective. And what I've heard from a lot of people is more people in their organization could be part of the virtual event than they ever could be live.
Yeah, that's right. That was the other thing that we noticed as well, is that there was a contingent that would obviously come, which, right, costs money and things like that. And then there's a contingent that could never make it before.
Right.
And now there's an opportunity for us to touch kind of as many people as we can, just to get them engaged. And I mean, I don't talk about just ICE events. I'm talking about just in general, right? It's going to be an interesting kind of dynamic going forward for sure. So it is interesting. The Zoom fatigue though is interesting. You know, like we've collected a few bits of data, and I'm going to get a little bit over my skis here, but we found that as a virtual event, like the proper time was like 15 to 20 minutes, which is hard to put meaningful content into like 15 to 20 minutes, but that seemed to be kind of like the sweet spot for those virtual kind of events, right? So there is an element of Zoom fatigue that we're kind of dubbed, but going forward.
Well, and the hard part is finding that balance, you know. So I've mentioned I've already gone to a couple live events, and what I found was it was really a struggle to be anywhere near as efficient as I was sitting at my desk doing 10 or 15 Zoom, go-to, Teams, whatever you want to say, in a day. And people are like, "Wow, you should get, internet at the airport or on the plane." Great. I get it. I've used those tools. There is no way I can be as effective jumping in and out of the airport, on the plane, jumping in the Uber, getting to the hotel. And then people are like, "Wow, then you just got to work a little longer." You finish all-day conferences. You go grab dinner with people, connections. You have a reception to go to, and you get back to your room at 11 or 12 at night. You can't stay up 6 more hours and do that work and be effective the next day. That's hard.
You actually brought up a really, really interesting point. I've never even thought about it before. Are our customers' expectations or anybody's expectations, forget customers, just like if I email you or Slack you, right, Michael, or text you or invite you to a Zoom meeting, if you're traveling again, am I still going to be under the assumption that you're going to jump on my meeting? Right? Because who knows, right? That's a really good point. Like, I think people's expectations they're going to be a shifting period, right? That's a really good point. Interesting. Yeah.
The other transition that I found is as people are traveling, engagement from social now takes a little more effort. When people were sitting in their office and they could be doing email and be on a Zoom call, they were also on social almost the whole day. Yeah. Airport, they're not in social the whole time. On the airplane, they're not on social. When they're sitting in the client meeting face-to-face, they can't be in front of their cell phone, pinging stuff and doing stuff. So it takes more strategy. It takes more effort to still get that same impact with people as we transition to some live, some virtual, and everything like that. Would you be attending MBA Annual this year?
It's
live, or
as of right now, that's the only travel plans I have is for MBA Annual. So yeah.
All right. Well, even though we're both in Michigan, that's probably when we're going to find time to break bread next is in San Diego as we get there. But
that's right.
So as we're winding down, and you and I could talk tech for hours. What are some of the other challenges that lenders are facing? What are some of the trends you see as we kind of round out 2021 and head into 2022?
Yeah, it's funny. Like, I'll kind of go to the remote working, right, type deal. There's a lot of companies, and I'll use the word scaling back, but scaling back in their property kind of use, right? So there's augmentation of their existing property, right? Their existing real estate, the areas that they take up. And then there's kind of like a scale back, and they're allowing more teams. I think one of the things that we learned is that many people can be productive working from home, right? And some prefer it for obvious reasons, right? Because of family situations or whatever the case is, but they didn't have that opportunity before. I see a lot of people really looking internally to say, hey, can we support this like long term? Is this helping us kind of recruit and that type of thing? So we're seeing a lot of that. I mean, I was talking to somebody a former employee of mine who's most of the IT people are now working from home, and they may stay that way. I don't know if it's going to be indefinitely or whatever the case is, but for right now, there's no rush to kind of get back to the office and that type of thing. So.
Well, you bring up so many good points, and let's touch upon those. I've had other guests and I've had other executives talk about this, and I think your first point of, if you have a footprint of 200,000 square feet office space, 500,000 square feet or 1 million square feet, and you have 15 people coming into the office regularly, what a waste. How do you change your lease? How do you downsize, for a lack of a better term, the office space? And I've seen companies just say, you know what, we only need common queues and common work areas for people if they want to come in. And because everyone now has a laptop, right? Because it had to for COVID, you can bring your laptop in and you can do it, and you're going to come in X amount of days. So I think a lot of companies are looking at that and saying, hey, we can save money doing that. Your point about hiring opened up a lot of floodgates with COVID, saying you can work from anywhere. And if you can work from anywhere, then you can just go and really focus on who is the best person for this role.
Yep, that's right.
Versus who's the best person for this role who can live in this area or is willing to move.
Yeah.
So I think there's a lot of positives, but now I've started to hear some trends of people saying, if you're going to work from home, we're going to pay you less.
So I've heard that one as well. It's funny. ICE actually went the other way. They said they're not going to change anything as of right now, right? So which is great. But it is interesting because they got to take it into account, right? The cost of living adjustments are different,
Exactly. If you were in Silicon Valley and we're paying you top dollar, and now you're living in Montana or whatever, is it the same apples to apples? I think that's going to be an interesting dynamic. And then I think the other one that the verdict is still out is the culture that you build with people, especially when it was all virtual. Like if you had to onboard people virtually, they've never stepped foot in your office space. They only know the 10 or 15 people they're working with. Can you still build that bond, that culture that really makes some companies exceptional and makes other companies average?
Yeah, I'm curious to see if this is going to be sustainable.
Right.
You know what I mean? Like I wonder if it's going to shift back, because I think over time, as things open up and people get kind of used to new life / return to old life type deal, like will it organically kind of slide back to where it was before? That's the part that I'm curious about. I think it will be throughout this year for sure. You'll see these trends, and then I think next year we'll see kind of what happens. Like, is it sustainable?
Yeah, because how do you maintain that culture? And you can only do so many Zoom happy hours. You can only.
That's right.
Oh, we're going to have a celebrity chef come in, or we're going to do a drink mixologist and this and that. I think it was very creative, and I commend the companies that did that stuff during the pandemic. But I think going forward, how do you maintain that culture? And are you going to meet live, or is it a hybrid like we just talked about live events? Saying, hey, Mondays and Fridays, you want to work from home, come in Tuesday through Thursday, or we're going to do 4 live events a year where your people are going to come back to headquarters, and that's still more cost effective than having everyone.
That's right.
It's going to be very interesting. I think you made so many excellent points. Eric, as we're wrapping up, what are some of the trends you think are going to take place? Anything else you see as we wind down, or what is some of the coolest technology that you've seen in the last month or two that you say, hey, people should kind of check this out, whether it's in the industry or just out of the industry?
Out of the industry? I'm digging this space race stuff between.
That's pretty amazing. So would you go up in space in one of those?
Oh, for sure. Oh yeah, like in a nanosecond. if I had a $500,000 or whatever they're charging now sitting around, I would absolutely do it. I think that's going to be an interesting trend to watch because what's the value in it, right? I mean, there's experience, of course, but there's always starts off as entertainment and then kind of this longer term kind of what's the value? Is that going to be how we travel? Because I can get from here to Germany in an hour and a half or whatever the case is. I don't know, those types of things. So I'd be kind of curious to see how that kind of scales. That's one. Yeah, go ahead.
And I think it's interesting too, as you talk about that space, people are like, is it safe? I don't know if I'd feel comfortable getting up in it. To me, what's fascinating is the people that are putting their money into it are the ones jumping on the ship doing it.
Yeah. Well, I mean,
it's the billionaire jumping in the air going on it.
That's right.
It's not him saying, why don't I send a couple of my people first and see if this thing works?
Right. I mean,
they're actually the ones going up in space.
I'm sure someone, when the combustion engine came out, right, or electricity, I'm sure someone like us sat around and said, is that safe? It's like you're basically you're making small explosions inside an engine and you're going to sit on top of it or sit within 2 feet of it, right? So I'm sure at some point they said the same thing. So this will be another evolution of social acceptance over time and that type of thing. So that's outside the industry. That's been kind of fascinating just to kind of watch some of that unfold and that type of thing. But in the industry, it'll continue to be, if I had to guess, probably some more M&A type stuff, right? With kind of trends there. And then really just this drive around automation. I know it's kind of a blanket term, but there's going to be a lot of focus on that to improve the scalability of lenders. So we'll see a lot of those things.
Excellent. Eric, you are always a wealth of knowledge. I can't thank you enough for being a guest on this episode of the Fintech Hunting Podcast.
Thanks, Michael. I appreciate it. Thanks for the time.